Hi, I'm Jimmy. In this video, we're looking at Alphabet, also known as Google. They have two different share classes, GOOGL and GOOG, but we'll come back to this in a second. Basically, what we're going to do in this video is we're going to analyze Google's business to see if they're worth investing in today. But before we get to our analysis, I just want to take a quick 30 seconds to tell you about a website that we're building that will have a discounted cash flow calculator on it. This is essentially what that calculator will look like, or at least have similar functionality. We're in the middle of building the website right now. Should be done by the second quarter of this year. Basically, you can enter in the tickers that you want up here. You punch in the tickers, it kicks back the fair value. We take analyst estimates for free cash flow or revenue, depending on what we have for each company. We show you the number of analysts that are giving us those estimates. In theory, the more the better. And then that kicks back the fair value of the stock. Ideally, we want to pay less than that. We're going to be using this later in the video to analyze Google's stock. But for now, let's jump into our analysis. So this is a breakout of Google's revenue according to their 2021 fiscal year. So it's their most recent year. These are the most up-to-date numbers. We can see that Google represents 92% of overall revenue. Google Cloud represents about 7% of overall revenue. And then they have something that they call other bets that represents just a third of 1% of total revenue. So it's not very big. But Google's actually breaking out their segments a bit deeper. So we can break out Google into Google Search, which is clearly the biggest part of their business, representing 58% of revenue. Google Network. Google Network is if you go to another website, not Google, perhaps another affiliate of Google, they're using Google ads on their website. That's generally where the Google Network revenue comes from. YouTube ads, fairly obvious. If you watched an ad before this video, that ad, Google takes a big piece of that. Google Other is a little bit different. So Google owns Android. They have the Google Nest. They have Google Play, different hardware. They have Pixel phones. That revenue goes to Google Other. Google Cloud and other bets stay the same. Other bets are really lots of little shots that they're taking. They actually have a section called Moonshots in their annual report. But these are little investments that they're doing all around the world, trying to see if they can turn into something big. For now, they're quite small, so it's not too important. Okay, now let's jump into revenue. Now, this is Google's revenue going back to 2012, and we can see that in 2021, they actually had a big jump up in revenue. The primary reason there was a bigger than expected jump in revenue was Google Search, which we saw represented about 58% of revenue, came in much stronger than analysts were expecting, so you got a big pop. Now, analysts are expecting a minor pullback in revenue in 2022, and then for growth to continue in 2023. So overall, I'm fairly happy with this trend higher. Things are moving up, and I think that's good for Google's business for any potential long-term investors. When we switch over to net income, the chart looks fairly similar. Huge jump in 2021. Again, largely thanks to Google's Google search business, and analysts are expecting for that growth to continue. Free cash flow looks very similar. I mean, we're seeing the same story. As I was doing the research for Google, you kept seeing the same story over and over. Google's doing better than people expected, despite the many legal issues that Google could be running into. They got sued by the EU. They got sued by America's governments going after them, anti-monopoly laws, things like that. Google's had to pay a few fines, but frankly, the fines have been fairly minimal. A few billion here, a few billion there. That sounds, I realize as I'm saying it, that sounds a little crazy to say it's minimal, but Google has so much cash. I believe on the last annual report, they posted 140 billion in cash is what they had. So overall, they can more than handle a couple $1 billion fines. Now, it is possible that Google is forced, when we go back to their segments, it is possible that Google is forced. Let's pretend America comes down hard on them and says, you're too big, you got to break up. If they spin off YouTube, that would be the most logical spin-off. YouTube as a standalone business could be worth a lot. If they spun off YouTube, so if we're investors in Google and we own shares of Google and then they spin off YouTube, hopefully we would get a piece of that YouTube business. If it was a spin-off, we would. So now we would essentially be owners of Google and YouTube. Generally, that works out fairly well, because when you have a large conglomerate like Google, there's something known as the conglomerate discount. The bigger the company, the more lines of businesses that they have, the more that they get pushed together and they get discounted by the market. But if they ever spun that off, well, YouTube would get priced like their competitors, and their competitors are priced at a much higher multiple. So in theory, from what I've read of analysts, it looks like the potential upside there could be in the 30% range if they did spin off YouTube. Now, there's no indication that they're going to, but if they ever if their hand got forced, I actually don't think it would hurt investors. Okay, now this brings us to one of the very interesting points, and then we'll jump into the valuation of Google. But one of the interesting points about Google is their share classes that I mentioned before. So, they have 3 different classes of stock. GOOGL is publicly traded. That's their Class A shares. GOOG is publicly traded. That is their Class C shares. So it might seem like going with Class A shares are the more logical shares to go with. In fact, they get a vote. But here's the thing. When we add these shares outstanding for each class of stock, well, Class A has 300 million shares outstanding. Class C has about 315 million shares outstanding. But Class B has about 44.5 million shares. They get 10 votes, which means they get about 445 million votes in Class B. 300 million votes over here, 445 million votes over there. The fact that whether or not we own voting shares or we don't own voting shares is somewhat irrelevant. Now, I do think that there's a couple important points to consider with this. First, if you are an insider and you have private shares that are not publicly traded and you want your shares to be publicly traded, you can convert your shares into Google stock Class A. So you would get shares, the insiders, if they decided to convert them, they would get 1 vote. They would give up 10 votes to get 1 vote, but then they would have a publicly traded stock. Now, in certain scenarios, that could make sense. I also think it's important to point out that from their 2020 annual report to their 2021 annual report, Class B shares were reduced by about 1.3 million shares. So either they sold them or they converted them over to Class A. Now, this chart here, you can see that these are the Class A shares, and the shares have been about flat. Meanwhile, Class C shares, which is GOOG, well, those shares, they've been doing buybacks to reduce the number of shares outstanding. This chart goes back to 2018. Both of these do. There's a slight increase in Class A, GOOGL, and a decrease in Class C, GOOG. Now, where this reduction in shares for Class C really helps the stock, or somewhat helps the stock, is that over the past 5 years, Google shares Class C, GOOG, have returned about 225%. Meanwhile, Class A, whose shares have remained about flat to slightly up over the past 5 years, have returned about 217%. So, not a huge difference, but it is about an 8% difference. And considering that if we bought Class C over Class A, all essentially we're giving up is a vote that doesn't count to pick up an extra 8% over the course of the past 5 years. Now, we don't know how that's going to play out over the next few years, but I think that we know that the company has continued to buy back stocks and approve themselves to buy back more shares. So I would expect Class C to continue to get the majority of those shares, especially since we also know that Class B will be converted into these shares. If Class B gets converted into these shares, you could see an increase in Class A shares. So ultimately, if I were going to invest in Google, I'm probably leaning on GOOG, since Class A, my vote ultimately doesn't count if the insiders don't want it to. That being said, let's jump over into the fair value of Google stock. So this is our discounted cash flow calculation for Google stock using a 7.5% required rate of return. And we can see that we get a fair value for the entire company of about $7,400 per share. Right now, Google's trading at about $2,700 per share. By the way, this is GOOGL. So the GOOGL is trading at $2,700 per share. Now, just so we know how this calculation works, basically we take free cash flow estimates going out the next few years, discount them back to today using a required rate of return. In this case, I'm using 7.5%. But if you were to use 10%, or if you were to use 12.5%, these are the calculation, that's what the result would be. This is the number of analysts projecting these numbers. So in this case, we got 23 analysts, 22, and 15 analysts. So we have more than enough analysts. When you get that many analysts, usually you can rely on those numbers. Those analysts tend to do a fairly good job of coming up with estimates. That being said, the important next step calculation here for anybody who's considering investing in Google is that, well, class GOOGL, this class of stock, represents 45.5% of the entire, of all the shares outstanding. Take that number, multiply it by that number. The new fair value is $3,300 per share. Again, right now the stock looks like it's trading at 2,700, about a bit over 2,700. So the stock looks like it's undervalued. Now, what if we were to switch over to GOOG? Well, using the very same calculation, this stock represents 47.75% of the stock and of the shares outstanding. Same math, again, $33.71 per share. This stock is trading at $2,600 per share. It also doesn't pay a dividend, which tells me in a stock like Google, I actually like it not paying a dividend because I want this stock focusing on their growth. And if they're paying out a dividend, I'd rather them do buybacks than a dividend payout, because if they're paying out dividends, they're really just giving us the cash. But if they're able to grow as fast, look at how fast their growth is here. They got double-digit growth. Keep the cash, get double-digit growth, keep growing the business, and in theory, the fair value of our stock continues to go up. Now, you might actually look at this stock price, call it $2,700 per share. GOOGL was trading at about the same spot, and you might say, yeah, that's a crazy high price. Maybe you're only going to get one share. Maybe you're going to get a half a share. Maybe you can buy 10 shares, depending on your portfolio. But there's actually an important announcement that Google made last month that I think will have a big impact on the stock. So, Google has announced a 20-for-1 stock split, which means that this, call it $2,700 stock, will split down to, they give you, if you own one share, they will give you 20 shares. But instead of being worth, call it $2,700, your shares will be worth about $135 per share. Obviously, that makes the shares much more buyable, much more, the average investor could get into it much easier, knowing that they could buy one share for $135. But the other thing that does is that there's already talk that if that were to happen, that Google could get added to the Dow Jones Industrial Average. Now, if they get added to the Dow, one of the benefits of that is that there's a lot of ETFs that track indexes. Those ETFs, if Google ends up in more indexes because they do a stock split, well, they could end up in much more ETFs, which automatically exposes them to much bigger investments. So long term, although generally the rule stands that stock splits don't really help a stock, it is just divvying up the stock. In the case of Google, I actually think it's going to help a lot, especially if they can get into the Dow Jones Industrial Average, because that's a unique situation. So, to illustrate, here are some of the top holdings of the Dow Jones Industrial Average. This is the weight that each company represents. This middle number here is the weight that each company represents within the broader index. Now, this is important because if Google does a stock split, they end up at about $135 per share. When I scroll down, price-wise, that would put them right around the same size as Nike. Now, you might say, well, why does that matter? Well, the Dow Jones Industrial Average has the unique situation of they are a price-weighted index. So, the higher the price the stock is, the more weight that company gets. That's somewhat unusual. If you look at the S&P 500, they're market cap weighted. So if you do a stock split, it doesn't really matter. It's the market cap that the market cap doesn't change from a stock split. The price of the stock changes, but the market cap doesn't. Well, if Google was in there today at $2,700 per share, they would represent such an enormous piece of the Dow Jones Industrial Average that it doesn't make sense to add them. They do that stock split, they fall into what will be a small piece to start with into the Dow, and suddenly it makes sense for the folks that manage the Dow Jones Industrial Average to consider adding them. That is why the stock split for Google could be very helpful from an investment standpoint. So with that being said, my question is, should I invest personally in Google? And when we look at the fair value calculation and we consider the trajectory of their revenue, their profit, their free cash flow, I'm going to invest in Google. Now, I would personally be buying the GOOG shares because as we saw, those shares have outperformed. If I'm going to invest in a stock, I'd rather the company be buying back shares. And I don't really care about the vote since it doesn't really count for us as of yet. So for me, I'll be jumping into Google, Class C shares, GOOG, over the next few days as long as the stock doesn't run up, because anybody who's been following this channel knows that I have this personal self-imposed rule that I won't invest in a company until I make a video about it and then give you guys a couple days to buy it. Really, the reason is that I just think it's morally the correct thing to do. I think I would never want to be accused of, trying to pump up a stock or something like that. I'm saying I like it. I'm telling you the reasons I like the stock, and then I'm going to jump into it, but I'm going to give you a chance to do your own research first. So within the next few days, I'll be jumping in and buying Google. Now, if you want to come over and join the website that is being built, this calculator will be on it. And in the meantime, you get access to our private investing community. If you want to come over and join that investing community, I'm excited about that community as it's been growing. We're approaching 1,000 members in a very short period of time. So it's been a really cool experience. We do these private live streams every week, and to interact with people, this Google idea came out of one of those live streams, and it's been, super interesting to be a part of such a well-informed community. So if you'd like to join us, I will leave a link in the description below. I'll leave a link right here to sign up. And if you do sign up today, before the website comes live, we are locking in your price forever. So the price will never go up on you. So if you want to join, link in the description below. Thank you so much for sticking with me all the way to the end of the video. I really do appreciate it. Thank you, and I'll see you in the next video.